Imagine a bank that's been around for over 200 years, wielding more power than some entire countries. This bank helped fund the Louisiana Purchase in the United States, and it even played a role in defeating Napoleon. It was huge, a real giant in the world of money. But in 1890, it lost a massive amount, about 23 billion pounds in today's money, because of problems in Argentina. The bank was on the brink of total collapse. That's when London's top bankers came up with something brand new, the financial bailout. We're talking about Barings Bank here, and it's the reason we hear about too big to fail in banking today. The same trick they used to save Barings back then is the exact plan governments have followed ever since, especially during the 2008 financial crisis. And guess what? They'll keep doing it over and over. That's why we need to dive into Barings Bank and see how it became too big to fail for so long. Let's go back to the 1880s. Between 1885 and 1890, Barings Bank poured over 140 million pounds of British money into Argentina. That's like 23 billion pounds if we adjust for today's prices. Barings was one of the strongest banks in the Americas. If a South American country needed to build railways, or if the US wanted to buy land, chances are the cash came from Barings. Back then, there weren't big global groups like the IMF or the World Bank. Countries relied on private lenders like Barings to pay for roads, wars, or even workers' paychecks. This gave these private banks enormous power. They could shape national budgets, control foreign money reserves, and even decide how countries spent on public projects. Barings had this kind of influence for decades. It might even be why the US grew into a superpower. When America was just starting out as an independent nation, Barings took a huge risk. They backed the US when other European bankers thought it was a bad idea. That choice linked the bank's fate to a rising superpower and turned it into one of the world's most powerful financial players. Without Barings' early investments, America's economy and geography might look totally different today. But before all that, Barings was already changing history in Europe. In 1792, the bank shifted from simple trade to helping build empires. Its loans kept British armies fighting against revolutionary France. The bank's founder, Francis Baring, wanted to show that wars aren't just won by generals, they're won by the bankers funding them. Interestingly, Baring himself was against the war personally, but he still worked closely with the government. In return, he made about 190,000 pounds in profit, which is around 25 million pounds today. This kind of mix of personal beliefs and business decisions was common in high finance back then, and maybe still is today. Ethics could wait, but interest payments had to be made on time. And here's where it gets even more fascinating. Baring secretly helped both sides. He financed Napoleon's deal to sell Louisiana to the United States, which doubled America's size overnight. On one hand, Napoleon needed quick cash for his wars in Europe, and America wanted land to expand westward. Both sides were suspicious of each other, but they trusted Barings. The same bank that armed Britain against France now arranged a deal between its enemies. It's ironic because, like the Rothschilds, Baring ended up betting on Britain. His management of Britain's national debt gave the empire the financial strength to beat Napoleon. As you can see, the bank grabbed every chance to make money while staying on the winning side of world politics. From there, Baring's influence exploded. Between 1820 and 1870, the bank was writing checks for half the Western world. Think government loans for France, Spain, Portugal, Russia, Canada, and even whole countries in Latin America. By the 1880s, Barings had become like the national bank for places like Argentina and Uruguay. They issued many loans that kept those economies going. But the twist in Barings' story is how it all ended. After more than 2 centuries of power, the same bank that funded wars, nations, and revolutions crashed overnight because of a single rogue trader inside. Barings was too big to fail for a long time. That's true. It lasted for centuries. The bank grew over time, and its downfall was as dramatic as its reputation. When it finally fell in 1995, the world watched in shock as Barings was sold to ING for just £1. That 1995 collapse might have been the result of centuries of putting profits and greed above morals and people. So, let's rewind to the beginning. Long before Barings ruled global finance, it started as a small merchant bank in London in 1763. The Baring family created it to get into the growing trade between Britain, the Americas, and India. But they soon spotted a big opportunity in the newly independent South America. London's other bankers were sticking to safe, old money in Europe. Those markets were steady, with good returns from factories and industry, but there was a lot of competition. Barings saw potential elsewhere. Argentina and nearby countries had rich land and resources, and they wanted to modernize. But their tax systems were weak, their money was unstable, and their income depended mostly on selling things like beef, grain, and wool. When prices were high, everything was fine. But when they dropped, investors got scared and the whole system shook. Most European banks avoided these risky markets. That's where Barings stepped in. They weren't just lending money. They were buying up the country's debt and holding it themselves. The bank piled up huge amounts of Argentine bonds that no one else wanted. This might not have seemed smart at the time, but for Barings, controlling the debt meant controlling the country's decisions. They acted like a hidden government. Through debt deals, they set Argentina's money rules, managed foreign reserves, and even influenced public projects. Debt became their tool to pull strings. Some people at the bank started wondering if this could last. Barings had filled its vaults with Argentine bonds that were basically promises from a country already on shaky ground. At first, they bragged about holding South America's future in their books. But when Argentina's economy broke, those bonds turned into worthless paper. To really get why Barings hit its breaking point, we need to look at what was going on in Argentina. For years, the country paid its foreign debts in gold but earned money in paper pesos. When export prices fell or prices rose too fast, this created a mess. To make payments, the government had to borrow more gold from abroad. It was like taking out new loans just to pay the interest on old ones. Between 1881 and 1885, Argentina's government and businesses borrowed about 150 million pesos from overseas. That's around 49 million US dollars today. 2/3 of that was government debt. So a big part of the budget went straight to interest payments. Every year, they owed over 8.8 million pesos in gold just for interest, which is about 24 million US dollars now. Instead of stopping, they borrowed even more. In the next 5 years, they took out 200 million pesos, worth about $545 million today. Even though their income wasn't growing, the old debt stayed, gold reserves ran low, but spending on railways, new cities, and big projects kept going. These projects looked like progress, but many didn't make any money back. Meanwhile, the Buenos Aires stock market turned into a bubble. Land prices shot up, people speculated wildly, and banks created and lent money that wasn't backed by real gold. On the surface, it seemed like a boom, but deep down, everyone knew it couldn't last. This is a classic example of an economic bubble. When gold prices went up, the government had to choose, slow down or keep printing money and dig a deeper hole. President Miguel Juarez picked the second option. By 1887, gold was running out, but he kept delaying gold payments that were supposed to be temporary since 1885. On top of the money problems, Argentina's politics were getting worse. By the late 1880s, prices were rising fast, corruption was everywhere, and people lost trust in Juarez's leadership. Another big issue for Barings came from a project meant to show Argentina's progress, a loan for Buenos Aires water supply and drainage. It sounded great, a clean water system for a growing city, backed by one of London's top banks. To London investors, this was proof Argentina was joining the modern world. For Barings, it was a key deal that showed faith in the country's future. What could go wrong? Well, almost everything. The company underestimated the job. They built only half of what was needed and still expected people to pay for a system that barely worked. By October 1890, customers owed about $1.65 million in unpaid bills. That's around $58 million today. Yet, the company had to pay interest to bondholders and make payments to the government. The pyramid scheme Barings had built started to crumble. They couldn't sell new shares to cover losses. Investors were terrified, and admitting Argentina's economy was collapsing would ruin the bank. So, they kept pouring money in to keep up appearances. The crisis spread to Barings' whole Argentine portfolio. Take the Cayamalan Land Company, for example. It covered nearly 600,000 acres, one of Barings' biggest real estate deals. But even that huge project fell apart. Barings had sold its mortgage bonds in London. As the economy crashed and money was misused, the company defaulted in November 1890. They settled the mortgage in 1905, but the land wasn't fully sold until 1929, almost 40 years later. Since Barings had backed this loan, every loss hit them hard, and it wasn't small. It left Barings dangerously tied to Argentina's growing problems. By the mid-1890s, frustration boiled over. Soldiers and civilians took to the streets in something called the Revolution of the Park. They seized Buenos Aires Artillery Park and demanded Juarez's resignation. News reached London by telegram, causing instant panic on the trading floor. If the government couldn't control its capital, investors thought it couldn't handle its debts. Even though the revolution was stopped, Argentina's reputation was destroyed. Bond prices soared as investors demanded extra pay to hold Argentine debt. Prices crashed on the Buenos Aires Stock Exchange, and all foreign money fled the country. By the end of 1890, Argentina defaulted. It stopped paying its foreign debts and was shut out from global borrowing overnight. For Barings, this default was a direct blow. The bonds they'd sold, the loans they'd guaranteed, the promises they'd made, all collapsed at once. The shock didn't stop in Buenos Aires. It spread straight to London, one of the world's top financial centers, where Barings' fall threatened to drag everyone down. In London, the problem's size became clear. When bankers checked Barings' records, shock turned to fear. By October, the numbers were disastrous. The bank had about £15.7 million in debts, around £2.1 billion today. It also held £8.3 million in worthless Argentine bonds, about £1.1 billion now. That was nearly half its balance sheet. Credit dried up, interest rates jumped, and the confident city panicked. London's borrowing lines tightened, and money markets froze. Every company hoarded its gold like a war was coming. Everyone saw the danger. Barings' debts connected it to hundreds of firms, and its failure could shock London's whole financial system. Banks would face defaults, markets could stop working, business would slow, and it could hurt Britain's economy and shake trust across Europe. So the Bank of England's governor acted. He sent a quiet note to Chancellor George Goschen urging him to come to the city. Goschen didn't need much convincing. He replied that compared to what was coming, the 1866 panic would seem minor. He was right. The clock was ticking. The Bank of England's gold reserves had dropped a lot. To buy time, the Bank of France helped by swapping £3 million in gold for treasury bills, and Russia added £1.5 million. Together, that's like £160 million today. With this support, the bank could tackle the crisis. In total, the Bank of England gathered about £17 million in rescue money, backed by London's top financial firms. This was a real financial bailout, and it wasn't just kindness. Every big player joining in wanted to save themselves. They knew if Barings fell, they'd be next. Barings' partners had no choice but to give up their personal wealth to keep the firm going. This included their homes, property, and even art. In the end, the broken bank was sold for £1.5 million, about £53.4 million today. This event changed how British banks behaved. Right after, bankers got more careful, but that caution didn't last long, as you might expect. In the big picture, the bailout sent a different message. If your collapse could hurt the system, others would save you. Risk paid off. For a while, survival felt like a win, and Barings' confidence came back. But the rescue had a hidden price. It was the first big coordinated financial save in modern times, a private-public lifeline for one bank. It created a model that every future crisis would follow quietly. Barings survived not because it learned a lesson or markets fixed themselves. It was saved because London's financial leaders pooled resources, signed secret promises, and shielded the bank from its own mistakes. Public checks were weak. Much of the rescue happened through informal deals and reputation, not laws. Even though the Bank of England was private, it took on a semi-public role. This bailout showed that if one bank's fall could shake London, the system couldn't be trusted to control its own greed. From it, the system learned the wrong thing. Instead of punishing risky lending, the bailout rewarded it. Future bankers realized that as long as their failure threatened others, they could count on government help. When Barings was rescued, economists hadn't coined moral hazard yet, but that's exactly what it was. A signal that some banks are too important to let fail. It meant risks without real consequences, where losses are shared by everyone, but profits stay private. If we break it down, the Barings crisis was a big warning. It was a message written in debt and denial, showing how global finance can trap nations. When greed meets weak rules, collapse is bound to happen. If you've stuck with this story, drop a heart emoji in the comments and subscribe if you haven't yet. I'm sure you'll love the next video. Thanks a lot, and see you soon.